Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and our guest today is Lauryn Agnew, and she's the president of Seal Cove Financial and the founder of the Bay Area Impact Investing Initiative. Lauryn, welcome to the show.
Thank you, Devin.
We're thrilled to have you. Now, the Bay Area Impact Initiative and Impact Investing Initiative and Seal Cove Financial are both kind of engaged in this notion of place-based impact investing. Tell us a little bit more about what that is so we can frame our conversation.
Sure. I've been involved in the investment business in the Bay Area for a long time, and I've served on both nonprofits and public pension plans. And I began to think about investing in our own backyard when I first heard about impact investing and how we might be able to use our assets for ways of promoting a mission or an objective like sustainability or prosperity. And I began to think of all the institutions that have big buckets of money that are oriented around place. Your employees are in place, your retirees are here, the people you serve, if you're a nonprofit, are here. Why wouldn't we want to put a little bit of our portfolios to work in our own backyard, so long, of course, as we could get market rates of return at market levels of risk, but also have an ancillary positive impact on our own backyard. And the Bay Area's got a great region to work that with.
Oh yeah, you've got a great thriving economy. It's a great market. But give us some examples of place-based investments that have impact.
Sure. I also think that we need to realize that different asset classes provide a different kind of impact. In our public equity portfolios, the best impact we can have is by voting our proxies and engaging with management so that they have environmental, social, and governance practices that would be aligned with long-term sustainability and prosperity in our region. And if we interact with the companies who are headquartered here in the Bay Area, we can have maybe a greater influence on how they treat their employees in the Bay Area and get them to continue to cooperate with things like housing and transit and power and other infrastructure. But likewise, bonds and infrastructure and real estate and private equity, each of those offer investment opportunities and a different kind of impact. We could be building affordable housing near transit stops in the Bay Area and provide returns to our portfolio, as well as some of these impactful benefits to the Bay Area and the people.
You gave me some great tips in advance of our conversation, and I just want to review those insights with you. The first one you mentioned is that creating a financial intermediary that can channel a small portion of institutional assets in any region to local investments can provide capital to local needs and challenges. Tell me a little bit more about what you're thinking in terms of creating that financial intermediary.
Well, yes, thank you. It seems to me that it takes a specialization to be able to identify deal flows that are going to be focused on a single geographic area, to be able to identify the managers that are going to be specialists in doing those sorts of things, and to give them a specialized mandate. It takes a lot of extra work to find that out and to create that. And if you are only going to devote a small percentage of your portfolios, then you're not going to get the impact or the economies of scale for doing that due diligence all by yourself. So my proposal was, why don't we consolidate that research and that deal flow and that center of organization through some sort of intermediary that could gather up all the small pieces of money and work collectively and collaboratively, stocks, bonds, real estate, infrastructure, and private equity together in the Bay Area. That would have an impact here. And that way we would all share in one team doing the due diligence, tracking the impact, measuring the risk and returns, and monitoring all the investments towards long-term goals. It would be about sharing.
So it really is important to create kind of the whole ecosystem, isn't it? So that there are all of those pieces can come together, and the intermediaries who play a role in that are just vitally important, I guess, right?
Yeah. I think that the talent is out there. We just have not really thought about segregating a tiny portion, like 1 or 2 or 5 or 10%, depending on what your mission is. For example, community foundations are highly aligned with local geographic missions, even though their donors also want to do a global mission. But we could certainly use some of the assets to put it to work and find out what our money can be doing right here in the Bay Area that we're going to share and across the capital stack, so that we could have grant money and public money and philanthropic money and pension money and endowment money all mixed together so that we could build new projects and new infrastructure and the things that we need to have the Bay Area to be sustainable and prosperous over the next several decades.
Yeah, one of the things that we don't talk about much in the impact investing world is the tremendous leverage that a little bit of philanthropic capital can have in that capital stack, right? Because $1 million of philanthropic capital might be all that's required to create a $10 or $20 million project by just taking some of the risk out and allowing investors to come in and fund all of the rest, right?
Right. I think we can call those the complex capital stacks, and those are evident in public-private partnerships, where you can have senior capital, either equity or debt, and then endowments and foundations are still giving out mission-related investments and program-related investments, as well as grants, and then corporate grants and other interest rates. And then we also have the Community Reinvestment Act and the insurance companies who are interested in reinvesting in their own backyard at sometimes very low interest rates. So putting it all together, we can make that happen.
Yeah, there's a piece for almost everybody.
Yes. And if we get a platform where we can talk about what kinds of money can be coming in and what kinds of projects could be invested in, then we can go by theme as well as by asset class and mix it up and make these things happen.
Yeah, that's fantastic. Now, you also observed that there doesn't need to be a sacrifice necessarily on return, right? You can get risk-adjusted market rate returns with some impact investments. Does that only happen when you're able to make it, when you combine that with philanthropic capital, or are there some projects that provide market rate returns for all the participants?
I think that we can build financial structures so that market rates of return can be achieved, and then those can be partnered with other capital that might make another project or pieces of a project fit together. But we can definitely build bond portfolios of local municipal and corporate bonds that will be performing just as well as the broad market. The same with the equity portfolios can be built with a focus on the Bay Area and governance and ESG factors that still make market rate of returns. And the same can be found in real estate and infrastructure and private equity as well.
Great. Now, Lauryn, as you become more of a role model, increasingly, I mean, you're very well known, very well recognized in the impact investing community, especially in the Bay Area. Tell us a little bit about who you look up to as a role model.
Well, I look up to the European pension plans for being leading edge in the way they've been addressing ESG throughout their portfolios. And they have a broader sense, I should include New Zealand, Australia as well, but they have a broader sense of fiduciary duty that the United States is moving towards. But not only do we want, as, say, stockholders, to be conscious of the shareholders' interests and maximizing returns, we also need to take into account that there are valid stakeholders in the community, in our employees, in the environment, and those also should weigh in our long-term decisions. And we're seeing that more and more out of the European and Western pension plans.
Excellent. Now, as we think about these issues, I think you and I share a common belief that they are important. And most of our viewers are there with us, right? They understand that these are important issues. What I'm curious about is why you felt compelled personally to engage so deeply, to make this your career?
Well, it's because it's very slowly being adopted in the pension side of the industry, even in the broadly defined institutional markets. The impact investing industry is making a lot of sense, and the data is coming together. Our legislation is coming together. The Department of Labor recently allowed ERISA include ESG factors in our analysis. And now the Chartered Financial Analyst Society is encouraging ESG to be part of investment analysis for the information it provides. As we see more and more climate change come up, and certainly the Bay Area is going to be broadly affected with sea level rise, among other things, it just seems to me that we need to find ways to combine the global capital that is out there, that is searching for good investments, and make sure that we put it to work in a better long-term sustainable way for everyone.
Yeah,
the world is just awash in money, and we can work it out and use it better than we have been, I think.
Sure. Now, we ask all of our guests to come on the show for what we call an impact hack, some tip that would help us to do more good. And clearly, you've had a lot of impact throughout your career. What would be a tip that you would give us to have more impact and do more good?
Well, you've got to ask yourself one question: what's your money doing? Or maybe, what do you want your money to be doing? I think our money is already having an impact, and we just haven't, for the most part, bothered to track what that is. So you can either look at your current portfolio and see what your footprint might be, or you can decide to do a proactive and intentional approach with some of it and begin to explore what you want your money to be doing, what aligns with your missions, and where can you find that. Wall Street and the financial industry are coming up with new and different tools. What we're not seeing is the idea that there might be a lot of people that would like to be place-based investors and invest in their own backyard. But right now the funds do not exist. And my initiative is to try to attract people to the concept that we can invest in our own backyard under prudent and fiduciary standards, and open the doors for everyone who'd like to put a little bit of their own money intentionally in their own backyard. We can begin to create these pools of funds. We can get money working and flowing right in our own regions, which would make a great impact.
Sure. Well, Lauryn, I really appreciate you taking the time to be with us today and sharing these great insights. Before you go, please tell people how they can learn more about you, about Seal Cove Financial, and the Bay Area Impact Investing Initiative.
Sure. I've got the website at sealcovefinancial.com, and the Bay Area Impact Investing Initiative is at BAIII.org. And please send your comments, and we've got Facebook and LinkedIn, and we're ramping up on those too, so we appreciate it.
Fantastic. Well, again, Lauryn, we thank you very much for being here with us today, and we wish you every success in building place-based impact investing as a model for the Bay Area.
Thank you, Devin. It was a pleasure coming.
All righty. Let's do some good.